How's it going, everyone? So today we're talking strategy. What I'm going to talk about today is a 5-minute trading strategy. Really, this is tailored towards short-term scalp trading because that's what I am. I'm a scalper. But what we're doing is going to be using the 5-minute candlesticks for setups and precise entries. And when we're taking those precise entries, it's going to be focused around the technical levels that I like to trade around. I'm a big fan of trading around pre-market high and low. I know there's a typo. And then also prior day high and low, and then high a day after some consolidation, and then low a day after some consolidation. Obviously, sometimes those high days and low days can happen quick off the open, and those can work. Obviously, got to be aware of the risk, but later in the day after a long period of consolidation, that's when those can work really well. And I'm going to go over some examples. The ones I'm going to go over today are going to be on Snow, Microsoft, NVDA. Those worked well. And I'm also going to show one that doesn't work and how when it doesn't work, you don't get beat up too bad. And that's going to be an example on D-Dog. Now let's go over the first example. This is going to be on Snow. There was a catalyst behind this. Snow is gapping up in sympathy to D-Dog because D-Dog reported earnings. So you had Snow that was kind of gapping above this 150, had a lot of resistance, was gapping above some of the short-term moving averages. So just realizing that it has gapped to the upside. Maybe it could continue, and especially because we've been in a very strong market. So what's going on in the pre-market? Let's mark this pre-market high, 156.83. I'm going to make this a light blue line. So those are the technical levels that I like to trade around. Pre-market high, pre-market low, prior day high, prior day low, high day, low a day. So what does this do off the open? It has a push into pre-market high. That is really quick. I do not want to chase that into pre-market high. It's all about waiting. What happens? How does it react to that level? Has a pretty nasty rejection at that level. Pulls back. And then immediately, buyers step up. This gets back above the VWAP and the 9 EMA. So here's how I see it. Can we consolidate above the 9 EMA, above the VWAP, and then also knowing that high a day is 157.79. So if this can hold the VWAP, the 9 EMA, and that's what it does. And then it eventually gets above this pre-market high, even though it was kind of dancing at that level for a little bit. Look at this wick off of it on this candle at 9:45. So it held that pre-market high, holding the key technical level. And then we're trying to anticipate basically an upside opening range break or a breakout of high of day. Now, this is kind of a chase into it, but this shows that as long as you're keeping that risk tight, you know, at the end of the day, it's just a probability of numbers, making sure that the downside is limited. So knowing that high a day, 157.79, let's say that I was pretty good and I was able to get in right around 157.70. Here's what I would do. I'd want to risk off the low of the candle that I got in on, especially being that this is a pretty wide range stock and the low of that candle is 156.61. So let's just say that we're risking about a point on this trade, getting a good entry right around 157.70. Anticipating that high a day, risking off the low of the candle that I got in on. Once we let it dance around a little bit, maybe it traps some shorts, risking a point, and then what happens? A nice move through 158, and then at least off the open, just for that momentum push, has a push almost into 162. So risking about $1, you get almost 4 points. So if you're going for that 2-to-1, 3-to-1, or even 4-to-1 risk reward on trades, you get that pretty quickly, especially being that there was the news catalyst behind this. So you had a lot of eyes watching it. You had that elevated volume, so the breakout worked. Now let's go over another example, Microsoft. Now to the left, you see this daily chart. It is very extended to the upside, but this shows the power of trend. When things are going in one direction, sometimes they can go a lot further than everybody anticipates. Microsoft had the gap up today. What was the technical level that it was trading close to? Because it was above prior day high, this pre-market high, 359.99. I'll make it that light blue. So even though this did have a nice break right here through pre-market high, it was very extended to the upside. I want to see it hold a level before I consider taking the trade. That's kind of the slight change that I'm making. Don't always just jump into everything so quick. Let those levels break sometimes, wait for consolidation, and then consider a trade. And this is exactly what happens. So it pulls back off the open. Buyers step up because they have been every single day. You can see the extension on the daily chart. It eventually, on this candle at 1025, it gets through pre-market high. So now it's just about waiting. What do we do? It comes back to pre-market high. It retests it. It forms the bull flag, it's above the VWAP, it's above the 9 EMA. So let's say we're going to anticipate a new high of day. The high of day was 360.77 at this point. And we want to try to get in just before that. But being that this is very extended on the daily chart, it's a little extended on the intraday, you know, we want to make sure to keep that risk tight. This is where using those 5-minute candles can be great. Sometimes it means getting stopped out quick, but those losses are going to be small. So on this candle, 1040, it closes kind of above that bull flag trend line, letting that next one open up 1045. We're going to anticipate that high a day break, 360.77. Let's say I'm pretty good. I can get in at 360.75. I'm going to risk off the low of the candle that I got in on, keeping that risk pretty tight. And that low is 58. So call it just about 20 cents to make it easy. Risking 20 cents, and then what happens? Makes that new high a day and has a pretty strong move basically up to 362 almost immediately. So risking about 20 cents to get over $1. Now, obviously, it's hard to catch the entire move, but even that quick pop on this first candle, you get that 3-to-1, 4-to-1 risk reward very quickly. Now to go over another example, this one's going to be on NVDA. If you look at the daily chart to the left, very extended to the upside, but the power of trend shows that that can happen sometimes. So what happens off the open with NVIDIA? It has a push into prior day high. This green line pulls back to pre-market low, bounces off pre-market low, gets back above VWAP, back above the 9 EMA, possible trend continuation like it has been for the last handful of days, and then it gets towards this high a day. And even though this isn't super clean, it's just the idea of seeing those levels hold and then being able to wait for a couple candle closes and then taking advantage of that momentum move. So it has this push up into this prior day high, kind of dances around a little bit. If something is moving to the upside, I like to see the opposite color, some red candles in there. And if something is moving to the downside, you know, using the opposite color, so waiting for some green candles and then being able to kind of risk off the low or the high of those candles. And then also, you know, the low or the high of the candle that I got in on. But here's how I see playing this. Kind of has that push, starts to hold prior day high, also knowing that high of day is 459.73. So just seeing, okay, can we get a little bit of consolidation here? And this is where patience plays a part. Like, this is a very surgical, technical entry, but if you play it right, I can see a tight risk reward here. So you end up letting this happen, kind of consolidates above this prior day high. I mean, I can see how you get in on this candle. The thing with this is that you have to risk off that prior low, or I would risk off that prior candle low. So basically this would be a $1.50 risk. And in my opinion, I think that's kind of far away. So it's almost waiting to see, okay, hey, let's let this candle close. We're holding above prior day high. We're also kind of holding above the high of day. What does the next candle do? And maybe we can use that as an entry candle. And that's exactly what happens. I think it pulls back a little bit and then immediately gets bought back up, go for that new high of day, kind of break out. And then this is where that risk can be tight, because now you're talking about an entry right around 460, and the low of the 5-minute candle that I got in on, even if I get in just a little bit over 460, because it's hard to be perfect, the low of that candle is 459.65. So you're talking about 50 cents risk, you know, go pretty quick. If it gets back under that candle low, I'm going to want to get out of the trade. And then above 460, this has a very quick move up to 462 for 3-to-1, 4-to-1 risk reward pretty quickly. Now that one was a little bit more difficult. That was a very technical entry, and it's hard to be perfect with entries. We know a lot of the times that, you know, many of us would probably have entered in a little early, probably got chopped up a little bit, and then eventually it were to go. So it's hard to be patient to wait for that perfect entry, but that's where being patient can really play out. And then waiting for those spots and letting them develop and then having that tight risk, it can pay out. And I thought this was an alright example of it. Definitely not an easy one, but this shows the power of it when being patient and waiting for those spots, which is not easy, but when you do it right, it can work out well. Now let's go over an example that didn't work, because nothing works 100% of the time. This is D-Dog. Reported earnings, had a big gap up, was clearing a lot of resistance to the left, above all the moving averages on the daily chart. What happens off the open? You have a 5-minute candle that closes red and immediately gets bought back up above the VWAP, above the 9 EMA. I know this could be a 5-minute upside opening range break. The thing is that risking off the low a day, that's pretty far away. So now it's just about waiting to see what it does, and maybe it has a setup. Has the push, gets through pre-market high, pulls back. It actually holds pre-market high, so kind of a break and retest. And this is where I can see the trade where it looks all right and it just doesn't work out. So anticipating the high a day at 103.40, thinking that maybe we could get some continuation. So let's say I were to get long on this candle and I'm pretty good and I get in, call it 103.30, trying to anticipate that high. And the low, I'm going to risk off the low of the candle that I got in on. So 102.50, here's an example of this just not working. Has the push, it fails to get above that high, and then it rolls over, and then it would stop me out. And to be honest, I think that the reason why this didn't work, or maybe why I would hesitate to take this, is because after such a strong move to the upside, in my opinion, there is not a long enough period of consolidation. Waiting for like 20, 25 minutes, 30 minutes of clear consolidation, I feel like that betters the percentages of the breakout working. But here is an example of even after waiting for that criteria, it still does not work. Because this looks pretty good. Let's say just waiting, being patient. Don't even take that trade right there. And then you want to wait for that 20, 25 minutes, 30 minutes of sideways consolidation. That's exactly what happens. Trying to go for the high a day. So it's going to be 103.42 because it kind of danced around that level a little bit. And this looks pretty good right here. So this was a green candle at that moment. Here's how I see trying to trade this. If I wanted to take this for the possible breakout after the consolidation, the continuation move, elevated volume above the VWAP, the 9 EMA, as this gets into that high, you know, on this candle right here, I'm going to want to take that long anticipating it. Let's say I can get long 103.40, trying to anticipate that high day break, risking off the low of the candle that I got in on, which was 102.93. What happens? It doesn't work. This stops me out. It rolls over, it breaks the low, and even though that is pretty tight, I want to make sure that when I'm wrong, I can be wrong pretty quick and those losses are never too big. So that's a good example of what looks like a very good upside breakout pattern, being pretty technical with the entry, keeping the stop relatively close because we want it to go quickly or just get out of the way, and then it rolls over and you lose about 50 cents on the trade, which, to be pretty honest, is really good stop out considering that D-Dog was moving points. So the range was incredibly wide. So risking 50 cents, I think, is a pretty good stop out for the potential reward of where it could have gone. So those are some good examples of the 5-minute trading strategy, some ones that worked on Snow, Microsoft, and NVIDIA, and one that didn't on D-Dog. That's it for the video. I appreciate you watching. Feel free to like, comment, and subscribe, and I'll see you in the next one.